Welcome to Drill On Earnings. We have quarterly results out from Applied Optoelectronics. Yes, I've been practicing saying that. I'm Cory Johnson, the Chief Market Strategist for Epistrophy Capital Research. I've been practicing saying that too. We look at the 50 most important companies in technology. We look for stocks that are on the move. We don't care about the stocks. We care about the prices of the things that they're selling. We care about the stuff. We care about the business. And we care about Applied Optoelectronics because it's an up-and-coming company that is making optical transceivers that are connecting data centers. And of course, they're in the cable TV business too. Full disclosure, I own some of this stock. I don't own a lot of stocks. I'm not giving investment advice, but I'm a little biased here, so take that for what it's worth. They did better than Wall Street expected here, a little bit better than my expectations as well in the quarter, and putting up pretty good numbers on a year-over-year basis, but expectations, everything in this business. And specifically, they had 99.8, hell, let's call it $100 million in business in the last quarter, the first quarter of this year. A lot better than it did in the previous year. And they're going through a lot of really big changes. But doing $100 million in business is 146% year-over-year growth, even though it's not a lot of sequential growth for this company. And there were some things that I was disappointed in, some things I was really surprised and pleased with. Their improving losses over time are good, but kind of stubborn as well. You know, down a negative 9% operating margin is not good. You want companies to be, you know, profitable. That would be good. Let's look at what this company sells. So they sell optical transceivers that are used in cable TV, they're used in telecom, they're used a lot in the data center. And data center is now 65% of their business, but they had a huge cable TV quarter. So as I mentioned, margins, operating margins down, gross margins, you know, they were okay, non-GAAP gross margins 37%, but their cable TV business exploded this quarter. They saw cable TV revenues of $64.5 million, up 6 times over it was a year ago, 24% sequentially. Really impressive. And when you look purely at that part of their business, up 146% year over year, just very impressive for this business. And yeah, the hyperscalers are spending and they're selling their datacom equipment too. So in the datacom business, they saw 123% rise on a year over year basis. That's really good. That's what they want in that datacom business, but cable doing even better. Shocking. One of the really interesting things, important things here, is the movement of production from overseas, particularly from Taiwan, and China, of course, is a concern because of tariffs, into the US. I met with a company a few weeks ago when they were in San Francisco for the OFC conference, and they talked about building up, about customers wanting to spend more in the US, customers like Amazon. They want to have stuff without tariffs. They want to support US industries. And the trick for that is for AAOI to get their production in the US, in their Sugar Land, Texas factory, to be producing the cutting edge, which is 800G, even 1.6 terabytes at some point, but 800 gig production. They say they're going to be on track in Q3 2025 to ship 40,000 units by the end of the month, 200,000 units by the middle of 2026. But it's really important for them to do that to capture that business here. Cable TV also expanding. I want to look at that in two ways. So the rise of cable, I've created some charts here in the orange. You can see the rise of the cable business is very volatile, but it's really helped support them while they're building the datacom business that can be so volatile. But this optoelectronic sales into cable and into data centers has really changed the scope of their business, that cable might be really, really big in one quarter, but in any particular quarter, datacom is really going to drive this business going forward. What happened when the stock was down 10% in after-hours trading when these numbers came out? I think because people like me were looking for big datacom business, still isn't growing at fantastic rates, but cable really saving them in this quarter. No, I say fantastic rates. It's growing great. We just want more, we're greedy. And the stock, look, the stock's up 36% in the last year, but it's at a really volatile run where while it's up for the year, hey, the thing was trading at 45, now it's at 14 and 13 in after hours. Very volatile stock, and it's not a store of value. It seems to be a store of speculative frenzy in the market. One other thing I want to talk about here again is moving a lot of their products, not just datacom products, but also moving their cable TV products into the US and their Texas production. But when we listen to them talk in the conference calls we did, and listen to the CFO talk about selling 800G, they're talking about selling to Amazon, and Amazon now owns part of their business, gave them money through a complicated warrant situation to grow their 800G business and grow their production in the US. They think at some point they could be up to a third of Amazon's production. Here's the CFO.
our belief, our expectation is that we can grow to be, the largest supplier of 800G and faster, higher data rate optics for Amazon. Now, that's not guaranteed by any means, but I don't see any reason why we couldn't be there. And that would imply a market share. Typically they're going to have 2 or 3 suppliers, so that would be, maybe 30, maybe even up to 40%.
So there you have it from Dr. Stephen Murray. Yeah, he's a doctor with a PhD. Yeah, he's Murray with M-U-R-R-Y. No extra vowels needed. But interesting company, interesting story. They're clearly putting all their bets on the ramp to 800G. All right, what's it all mean? What's your big drill down earnings takeaway? And what's the one number that tells us a whole lot? Well, Applied Optoelectronics Q1 earnings. Here's your essential summary, your drill down earnings short, if you will. Dramatic growth in the top line of 146% for this company selling data transceiver devices into the data center, which is why I'm excited and why I own the stock. That's my bias warning. That's not a stock recommendation. But their cable business, selling into the cable business, did really well this quarter. They did just fantastic cable business of $64.5 million in the quarter, up from 8.7 the previous year. Amazing growth. And maybe that's your biggest takeaway here, is that the cable TV business growing at fantastic rates is a shocking thing for a business that a lot of people think of as just datacom. It's doing both. Thanks for checking out Drill Down Earnings. I'm Cory Johnson.